the rhetoric continues to be ratcheted up. Markets seem to be breathing a sigh of relief this Tuesday.
That does indeed appear to be the case, because we're seeing stock markets rebounding across the board, really, after a sharp drop on Monday. This is tensions between Russia and the West over Ukraine seem to be receding. I say seem to be receding because we're not sure of that. At the same time, attention is turning back to Ukraine's strained finances. U.S. Secretary of State John Kerry arrived in Kiev earlier as the United States pledged to help the country's new leadership with a $1 billion lifeline. But that's not going to be enough in the longer term, as Joe Tandy explains.
Bringing America's blessing to Kiev's embattled revolutionaries and $1 billion in aid to revive Ukraine's economy.
We will help you.
With Ukraine's economy in dire straits, the American offer won't go all the way. The country's debt-to-GDP ratio stands at 40%. Borrowing costs are sky high, while Kiev says it needs to find $35 billion over the next 2 years to fend off bankruptcy. An International Monetary Fund delegation is also in the Ukrainian capital. The country's new leaders have asked the fund for $15 billion in loans. Yet any IMF aid package will require painful reforms to the Ukrainian economy. To make matters worse, Russian state gas company Gazprom has announced the end of Ukraine's discounted gas imports.
Gazprom has decided not to extend the discount starting at the beginning of next month.
In exchange for closer ties with Moscow, Gazprom last year granted Ukraine a preferential rate of $268 per 1,000 cubic meters of gas. From next month, the price will rise to $400. The European Union has offered to help Ukraine pay the $1.5 billion it already owes Gazprom. Yet the Russian giant has sought to keep Kiev in its debt, offering Ukraine up to double that amount in credit to help meet payments.
Now, we've seen a relief rally for stocks worldwide on hopes that the standoff between Russia and the West is cooling. This even as we are seeing barbs being traded once again between Moscow and Washington, D.C. This is the picture at the close in Europe, though, and as you can see there, the indices, they were sharply higher at the end of trading on Tuesday. Look at the MySex, which is the main stock market index over in Moscow. It was up 5.2% on Tuesday. This follows an 11% drop, though, on Monday. So the MySex is not completely back where it was last week. Let's also talk you through where the American markets are this hour. We're seeing a pretty broad-based gain for all three main indices over on Wall Street this session. The Dow Jones Industrial Average is currently up by more than 200 points, or 1.4%, as investors, as I said before, seem to be breathing a sigh of relief. We'll see if it continues to be the case, as we're seeing Moscow and Washington, D.C. continue to trade barbs. Now, the Geneva Motor Show is one of the biggest annual events for the global car industry, and it opened its doors to journalists this Tuesday as car makers rolled out a range of new offerings. On the more expensive end of the scale, Ferrari unveiled a new convertible. The California T is meant to be both lighter and more fuel efficient than previous versions of this vehicle. Rival Lamborghini has also unveiled new muscle at the motor show. The Italian brand, which is owned by Volkswagen, introduced the Huracan with a price tag of around 200,000 euros. Now, car executives say the mood is more upbeat in Geneva this year as Europe's car industry sees the light of a very long tunnel. The car industry is expecting a 2% increase in European car sales this year. That follows a 6-year slump, with sales hitting their lowest level since 1995 last year. Still, there are warnings that it will take a long time before European car sales come back to the pre-crisis levels that we saw back in 2007. Earlier, I spoke to the head of Spanish brand SEAT, which is owned by Volkswagen, and I put the question to him whether there'll be real growth in Europe or whether the market will bump along the bottom in the years to come.
I think it's very hard to predict, to be really honest. I think we should take the positive signals as they are. And I think we've seen much weaker starts into the year in the past 5 years. So we should be happy that the year 2014 starts well in most markets. There's a sign for more demand than we had in the prior year, and we take it step by step. I think the important piece is that mentally we say goodbye to the crisis years and we mentally open ourselves up for some more positive news in the years to come.
Okay, let's look away from the Geneva Motor Show now and take a look at a few other stories that we're following for you. Jobless ranks in Spain fell last month by around 2,000 people. The drop is modest and more than 4.8 million people are still out of work in Spain, but this is the first February since 2007 that unemployment ticks lower. The month is traditionally weak for the Spanish labour market, but the uptick is seen as a sign that the recovery is taking hold in Spain. Germany's biggest power producer has posted its first full-year loss in more than 60 years. RWE blames asset write-downs for a full-year loss of €2.75 billion for 2013. The utility is suffering as an energy transition is underway in Europe. A surge in solar and wind power is undercutting the profitability of RWE's coal and gas-fired plants. Weak energy demand is also seen to be hitting the bottom line. And Australia's government says it wants to rewrite the rules that govern foreign ownership of the national flag carrier Qantas. Foreign investors are currently barred from holding more than 49% of the airline's capital, and Qantas itself says it's in the way of its attempts to turn profitable again. Opposition parties in Australia object to the move, though, and they may stop the rule change from making it through the Senate. Story to watch there in Australia. And with that, I'm going to send it back to Francois for a little bit of sports news, I believe.
A little bit. Thank you very much, Marcus Carlson. Let's say hello to Dan Levy. How are you, sir?
Hi, good yourself.
All right. A bit of an end of an era, you might say, with this announcement out of Barcelona.
That's right. This is Carlos Puyol.